Hey traders, what's going on? Jamie Saettele here. It is July 20th, Thursday, and welcome to the Midweek Strategy webinar with SB Trade Desk. I guess it's closer to the end of the week. But my goodness, how much fun! What a fun morning. We will just kind of start with the dollar generally and then work our way down to the majors and look at a few crosses, although clearly this is it's turning into just kind of a complete disaster, um, you know, for the dollar. But we're getting into some pretty big levels, I think, for the dollar. So we had started the week here looking at this is DXY, right? So the two indices, the $2 indices, DXY and of course US dollar. I actually prefer to look at US dollar. Again, because it's so heavily weighted, this is so heavily weighted to euro, right? As you can see, we've taken out the level that we were kind of, looking at, I guess was the 90, loosely saying like 94.40, just because it's this parallel. But there are, you could go, the next parallel down would be actually closer to 93. 15 or so, 93.20. You've actually got lows down there from May of 2015, spike low August 2015, which was the China revaluation crash. And then, of course, you have the low from June of last year, which was Brexit, right? That big spike. And that was 93.02. So maybe that 93 is the next one. I don't know. If that happens, then Euro's obviously not really stopping here. Although this is what I kind of have as resistance. Well, look at that. Get the chart from last night. But do want to give you, the levels that I'm paying attention to. And look, the dollar's clearly in a very, very strong downtrend. And people, just kind of the sentiment on Twitter, people are kind of starting to throw their hands up in the air. I do notice like a couple of people that I know are starting to say, at this point, I don't know, right? At this point, I don't know where's resistant. They're kind of exasperated. So that makes me think that the psychological profile of the market is actually fit or ripe, if you will, for a pause in this move. And we've taken out now the August 2016 low. So I'd say anything between here and basically 93. All right. A lot of times we like to look at the Friday low thing, right? Or Friday highs and lows. You'll oftentimes go and you're in a trending market. A lot of times you just get the Monday low and you'll go to a Friday high and vice versa, right? And that's certainly the something to talk about with the Australian dollar right now. But maybe watch for that Friday low tomorrow. I think you've got Canadian dollar. Yeah, it's just basically CAD data tomorrow. So, but the U.S., who knows? I mean, there's something with Trump every other day here. So, I can envision, oh yeah, we are investigating, but we didn't come up with something, or it's not what you think it is. But who knows? It's the whole thing. It's just pay attention to the levels because we really have no control over anything else. So anyway, that's DXY. Now US dollar, again, one I prefer to follow. This is the one we came into the week thinking basically 11,950. And it telling, I guess, the August low in US dollar. This was the election low, but the August low has yet to be reached, right? And we just took that out in DXY. So the median line for this, which is just a gorgeous slope here, you've got just the trend line from August, actually 2011 to July of 2014, early July 2014. And that's another thing too that you will see here. Look at the months of the turns within the entire dollar move. 2011, late July, early August. These are weekly bars, right? 2013 high, July. 2014 is early July. 2015, was there anything in July then? Not really, minor top. 2016, obviously you had August here, and here we are in 2017. So for whatever reason, July to August, kind of what are thought of as the dull summer months, have not been really dull at all in terms of pivots or changing of trends, even if just minor. Okay, looking for a reaction. So yes, 11,950 still the area to watch, and we still don't have anything on the journal, right? Like I've been waiting for front page of the journal to say dollar doldrums or something. We still haven't gotten that. So the fact that we haven't gotten that yet, maybe it happens tomorrow. I don't know. But the fact we haven't gotten that yet, you kind of need that as a prerequisite to get any sort of relief in this move. All right, let's go to the euro, or start looking at the majors. So the euro, I mean, this played out just silly good. Right, you got the scrolling out here. Nothing like a good slope. So week open was 72. We bottomed at 79. I guess it would depend on the platform, what you're looking at. And we just hit resistance, or what I think is resistance, in the form of several things. But you've got, there's multiple parallels up here, obviously. You've got this one. And again, all this is a trend line from back here from the April low, okay? And we're going that off the May low. And, it goes to show you too that just because, like, if you start breaking something, that doesn't mean that you change your angle. A lot of times the market will come back and follow that, and it's clearly followed this very well. I mean, look at all the good pivots that you did have on this, and even the minor top, right, which I guess was earlier this week, and then the one that haven't quite reached it. If you were trading it, as I suggested in last night's thing, I didn't have an order or anything. ECB was kind of iffy to do that because things can change so quickly, and managing the trade's a little different. And plus we're getting a little old in this move and whatever. But we, the levels worked out well, and we've got, if you want to be real precise, it is a little higher, okay? But this is the same parallel that gave really the last important correction, which was, most of June. So here we are, trending month. Even if this is not, so-called the top for wave 3, even if it's just some sort of a minor top, even a pullback would still be, still a good place to know. And at this point, by the way, 115.61, that's your high volume level from today, okay? That's what you want to pay attention to if you do come off at all. And you can see it here. So yeah, see the high volume hour, right, from this morning. So that's the high volume hour at 115.61. Now look, if you have, I guess balls the size of a rhinoceros, then maybe you want to try to short this. I don't, not really for me. Probably 10 years ago, I'd probably be trying to do that. And it would have worked too, but I'd also get blown out of the water sometimes. So not really for me at this point. I mean, I guess for a short-term scalp, it's a different story, but I'll wait for the week to close. But there are opportunities to maybe look on the short side in euro in some of the crosses, right? Euro Aussie's one, even Euro Yen, and we'll look at that here in just a minute. But let's go to a daily then, though, with euro. So what I've been trying to figure out here, I actually have it written on a different or drawn on a different thing here. Amir asking for euro pound. Yeah, you got it. We'll look at that. Euro pound's been pretty difficult for me to get a hold of. I keep thinking it's reversed. Obviously, it hasn't. I keep trying to look for, if you will, or try to understand what the broader, and we'll look at gold and silver, Sarab, absolutely. I keep trying to understand what the broader slope is for euro, right? So remember before we were looking at, and there could be multiple, but before we were looking at this one, I had this, and there were a couple reasons why I thought this might be the one, right? Primarily because the 25 line was more or less resistance on the way up. Okay, if that's the case, then you're probably going up to 1800s before you do anything at all on the downside. Oops, I don't have that right there, right? My problem with this one, I guess, is that Vladimir and sugar. Yeah, we'll look at sugar too. We looked at that last week. We'll look at sugar again. My problem with that is, we should have the answer relatively soon. I'll say that. But a lot of times, what you like to see is you do like to see kind of a first touch on the median line, kind of do something a little more precise than this. So, if we were to, and it's all a work in progress, right? You change your mind as you get the data. Like we already know what this good slope is from the April low and the May low, right? That's what we've been working with. But bigger picture, if we were to get something like this, if you were to get say we do have a minor top here, if we get pulled back to this, to the median line, and then we go higher off of it, that would suggest to me that this is actually the right thing to look at, right? And then in that case, your next top or area for a top would probably be up here, okay? And that's obviously a good deal away from current market. All right, so if we start to see that happen, we'll have increased confidence in what we're doing and what we're looking at. Now, the other slope that one I showed yesterday or the last 2 days is this one. Okay. Now, what are the reasons to think that this one might be, reasonable or so-called working, right? Well, one is simply the fact that the median line does kind of define price action a little better. You have the Brexit low on it, for example. The 25 line, while not as precise on the resistance, although if you raised it, it would be, it was actually support back on May 11th, the May low. You had a gap through it too, so you always like to see that. And this one, you did have kind of more action around the median line, right? You did pause at the median line for a good period of time, right? This was that June move, and then you had the rip right through it, which was on June 27th. So that's kind of what you want to see, which is why I'm open to, maybe this fails a little bit up or fails up here, which would cross through the August 2016 high as well. So, that's kind of my thinking out loud and how I go about it. It's really just, it's a visual thing, and you want to know how the market acts around certain parallels to see if you're kind of on the right track, right? And it takes a while to figure out which one's correct, but once you figure it out, you kind of have that for a while. I mean, you can have it for years or months or whatever to trade on and trade different levels. Such is the case with this one, right? I mean, this was a much broader, broader slope, but and that would get you up to the 11860s, but that's a much broader level, but that's something, a good example. All right. So that's euro. So for now, I'm on the sidelines with euro, and my bias, if you will, is to just kind of wait, I guess, and see what this wants to do. If it wants to pause a little bit and pull back, then we'd watch for support at 1560 with the understanding that we're kind of late in the move and that we could be reversing. But below 1560 would tell us that we have probably actually reversed. And at that point, you would be looking at a short position or a short setup. Okay. The alternative scenario, or another, is that we continue to just kind of blow this out of the water, and that we go up and we're testing 1875 or so, okay, which on this chart, the arithmetic chart, is the very long-term 25 line and the 2010 low. All right. So for now, it's wait and see. Okay, so it took about 6-7 minutes on euro there. That's all right. It's a lot to talk about. Let's go to cable. Cable's pissing me off. Although it was not stopped out today. Missed it by 3 pips. So maybe dodged a bullet there. I don't know. High volume level for cable has not held. As you can see, it's this drop from earlier in the week. I think that was the inflation numbers. And it's like 130.25. This high up here too. So, it's an important level. We obviously need to get back above there in order to think higher, or that we are, going higher and not wrong. Look, everyone's going to see what they want, but I can certainly make a case that, if I go to like a real short-term chart, like a 5-minute chart or something, let's go to a 15-minute chart. I can certainly make the case that you've got an A down and a triangle B, right? Triangle B wave. So A, B, and then you got a C wave lower. And that, we've now rallied in a 5-wave affair from the low, and that we should be going higher, right? 1, 2, 3, 4, 5. Okay, that's all fine and dandy. But it's really the broader picture that I care about. And the broader picture says that 135 is crazy big. Hold on here. $135 says it's huge. And it just looks, to me, it just looks like the market wants to go there because it's just such a huge level. This is the 2009 low, financial crisis low, post-Brexit recovery highs in the same area, 38.2 retracement of this, which could just be a big third wave, is 34.70. That's where I think it wants to go. Now here's the thing that we don't want to forget about is there is the possibility of a complete shock and another low in pound. That doesn't seem to really make any sense to me, because if the dollar has really put in some sort of a major top, then how the hell are you going to have it, get this? But I don't know. Maybe there's another debacle in the UK. Who knows? They like to vote all the time, it seems, and who knows what they do next. So, basically just 135, write it on your wall. 135 is huge. And if we get up there and start showing signs of a reversal, then I'd like to be, maybe shorting it. But look, this is cable. We're currently near 130, 500 pips. Seems far away. It's really not, right? What did we do last week? In the course of 1, 2, 3 days, we went from basically 128 to 131. We went 320 pips. And that's in a very low volatility environment. Volatility in the UK, volatility in picking up now across the board, but volatility in the British pound is extraordinarily low. It's the lowest we've seen in years. Okay, I'm not talking about like options and stuff like that. I'm just talking about actual volatility, like actual price movement, right? Not getting into the option stuff here. But you can get there in a hurry, is my point. So, I'd like to be long if we're going to go there. If not, then I'll be out with a losing trade, right? So that's really it with cable. I don't really have anything else to share with cable. If we do fail, if we are stopped out, one reason the stop was 29.30, by the way, is this square root level here at 29.40, 43 actually. Sorry, you can see these square root levels. Yeah, 29.40. So, generally speaking, you should hold this. Like you shouldn't break. If you're still in an uptrend, you shouldn't be breaking, basically two square root levels, which we've already done, right? We broke below 30.54 and then 29.43. So if we were to break this, my thinking would be that you're probably going back towards this parallel, which would be, just above 28.43, which is another, again, a square root level, which has been a pretty good horizontal level. So that's all. But yeah, this trade idea is just nothing more than buying a dip within, near-term uptrend, but maybe going into exhaustion to 135. All right, let's move on. Dollar yen. I think dollar yen's going to 110. Saw the chart last night. The general idea, I guess, of wanting to sell a rally probably is correct. Maybe we're looking for too much of a rally, right? You got to know where you are in the grand scheme of things. I mean, 111.58 is the February low, and the February low, the area around it's been pretty important for really since that time. So you've had some resistance around there, consolidation before a break, right? Consolidation before a break, consolidation before a break. So thinking that we are consolidating around this area. We've been here for 3 days. We got the 200-day average here, right? As many people have noticed, but I'd like to still like to sell up here at 113. Maybe you get that on some sort of a dollar pullback, right? Or a dollar bounce. And again, even if you go a little lower, right, at this point, you can see 113.02 would be the 50% retrace. Even if we go a little lower, maybe to that 111 area, 110.95, which 110.95, remember, is 618 of the rally from here. So maybe we get down there and then get a bounce. Either way, I don't like selling, unless it's very short-term scalping type of stuff, right? Where I don't like sitting in a short position, pressing a short into like 200-day average in this level, right? The setup needs to be proper. It needs to be a sale at resistance. And I do think we're going to 110 area, 109.90. I guess it's a matter of how you get there. And here goes dollar yen taking a free fall as I'm viewing this chart. You can see euros actually might have petered out. It's not really doing much. Yeah, that looks to be kind of all yen, right? That little spill action. You can see that stocks aren't really doing anything. S&P's flat. Dow's down 45, NASDAQ's up, of course it is. Even the Nikkei's up. I guess bonds are up, so maybe that could be it. So yes, we're going to this area here, 109.90, 110. Question is, do we go to I just went blank. Do we go to 113 first? All right. But yeah, just follow this slope. Again, this is a trend line. This is a long-term trend line. This is going all the way back to the low from 2011, 11 or 12. It's going back to the trend line to right here, October of 2011. But the parallels, beautiful. The median line helped us identify the top back in January. And since then, this line, which is actually 12.5%, has been resistance and support. So, it's been spot on, quite useful. So continue to pay attention to it. So really, no change as far as my immediate preference on dealing with the with dollar yen. Why don't we, before I go into Aussie and whatnot, and Kiwi and CAD, because we just looked at dollar yen, why don't we look at gold and the bonds? Because obviously, when you're talking about dollar yen, those two, tend to help out as far as getting a feel for what the deal is. Amir asking, is S&P 2480 still in play? Yeah, I don't see any reason why not. I mean, it's 24, cash is 2472 right now, right? So it could happen in a blink of an eye. Right, 2480, 2490 has been that long-term target forever. I thought we were going to get there. I was hoping we'd get there in May because I had all that analysis suggesting that we would get there in May, but the market's just kind of taken its time and churned and churned and churned. We haven't gotten there, haven't done much, and maybe we're doing it now. I don't know. We'll see. But yeah, 2480.90, very big level. So thank you for reminding me about 2480.90. All right, gold. Let's look at gold. So gold. Gold looks like a 5 up here to me, doesn't it? So 1, 2, 3, 4, 5. So what that means is that you're at risk of a kind of a pullback, right, or a little pause here before the gold has an even larger rally, and that actually would fit very well, of course, with dollar yen doing the exact same thing, or the opposite, but yen doing the same thing. In other words, dollar yen getting a bounce and then tanking. So 5 waves up in gold, great sign, especially because we had a weekly reversal last week. Silver did too, following through on that. That's a great sign. 200-week average. Yeah, so good sign, very constructive on gold and silver for that matter. Gold looks a little cleaner to me near term than silver does. Just because silver's, remember that flash crash from a couple weeks ago? So like on the CFD, you still have it. Amazingly, it stopped right at a trend line. But on the futures, I guess they canceled trades because they got rid of it. You can't see it, but it would have been down here. Okay. So yes, you can see here's the picture in silver, still similar in that, I guess you could make the case that this is an impulse and it's going higher, but I don't, I would watch for support on this median line, which is about 1595, right? You can see you've had some responses there, but to me, gold is just a lot cleaner. It certainly, fits a nice narrative as far as getting maybe a pullback and then another rally. So very bullish potential setup here for the gold market, with a pause and then a big move up. And by the way, seasonals for gold are positive throughout August. We're in a fairly bullish period for the seasonals for gold. All right, what about the bonds? So if we look at TLT, which I have charted up nicely, this is just the long bond ETF. Got a good bounce. We were looking for a bounce. Got a good bounce. And if we're going to roll over in bonds, which means higher rates on the long end, what you're going to get is probably a pullback from around 126. So we're getting close. And the reason I say 126 is because this parallel right here, as you can see, was support, right? It was support in May and June on the way to a new high. It's a little tricky here because you're still within a strong, near-term uptrend. A lot of people are wondering if this is the secondary high within the bonds. I don't think it is. I think you're going to get a lot more back and forth in the bonds for a long period of time. Probably going to have something like, this is long-term, probably pull back here to the median line, then go higher again. I think there'll be a lot of good trading in the bonds. It's going to be tricky. So look for 126 resistance. You've got a good high up there. 618 is a little higher, 26.28. If I look at bond futures, same idea, right? A little different on the details, but the same idea. You're looking at resistance probably near 155, 155, 618. You also got 155 half is April high. So yeah, there's good stuff up there for the bonds. All right. Okay then. How about we take a look now at Aussie and Kiwi and all that. So the Australian dollar, beast mode, right? So there's a lot going on here, but just pay attention to this. You have, all the stuff around here. All right, this is the old 75 line. So that line is, up around 81 basically over the next couple of days. I think that's probably where Aussie experiences its first problem, right? Right, 81. I think that's where Aussie experiences its first kind of issue with strength. It could come earlier. It could come at 80.50, but given what kind of a breakout this is, I'm more likely to give this the benefit of the doubt, at the higher level. 81 also puts you in the area or the region of the 2015 high. So, being really patient with this trade and trying to just milk it as long as possible. It's not easy, right? You see 400 pip gain and you want to take it, but let's see, let it play out. Again, the stop here is down below the early week low, which was Tuesday, not Monday, but that's okay. And, there's plenty of room to work with here. So, I still like the idea, by the way, of looking for support on a pullback to basically 78.70, 78.75 to add to the trade. And, why? Well, it's former resistance, not resistance in the form of a horizontal level, but resistance in the form of a slope level, right? Which is the former upper parallel here. So you have 714 high, 717 high, minor pullback, right? That was actually Monday, but that's where we should be looking. A lot of people will probably be looking for a pullback that never comes, right? They'll be looking for a pullback and a retest of, 78.35, right? this kind of breakout, a lot of times you don't get that gift, right? You don't get that. So, and this is a true breakout. So look for that 78.70s, right? There will be a shakeout. I guess this intraday is a mini one. We were down intraday, but that's the level that really piques my interest. And if you're wondering what the hell these lines are that are, way off on the corner, it's simply what I'm doing here is because this is such a well-defined structure and that we hit so many levels within it, that what you do is you take the width, okay, of this, and you're expanding it out. So, a lot of times you will actually see the market experience its first reaction off of that measurement. It's almost like think of like a fib extension, right? It's just a pitchfork extension in time and price. You're setting it at, a parallel out into the future. This actually happened. I can show you a recent example of it. This actually happened with Euro. So I believe it was this one we were following. I think it was this one, or maybe was it that one we had? Yeah, because that was the trend line we had, and we did something similar. Yeah, so you can see right there, that was a 2 and a 3. So we had an extension of the median to here, and that ended up being resistance. Okay. We actually have just blown through the entire thing, like the entire width of it, I guess you'd call it. I'm sitting here with my fingers trying to show you, but I realize you can't see me, my fingers. So yeah, we've blown through that, but it's just a good example of kind of what to look for, the different ways to use parallels. So that's the Aussie picture. Basically, the next levels that you want to mess with are, I think, 78.70 on a dip if you get it, and 81. And there's more to that. If we just draw the trend line from back here, January 2016 to December 2016 trend line, this parallel, which it goes essentially off the highs here from early this year in February as well as March. That's clearly old resistance. Okay, that's in the same area, 78.70s, right? So we'll see if we get it. Obviously, I don't know if we will. Therein lies the difference between, say, anticipating a correction or something and actually trying to be, say, short. Like, I wouldn't want to be short here. I want to buy 3 waves back, right? And this could be A, this could be B, and we could go down for a C. If we're going to do it, this is the place to do it because it's a square root level. Okay, the square root levels really solid here, right? We talked about earlier in the week, 77.90 as potential support. Why? It's a square root level. Okay, 78.75 is potential support. Why? Well, it crosses all the stuff we just talked about, but it's a square root level. Okay, so you'll tend to see the market trade in respect between square root levels when it's kind of a clean technical market, and Aussie's probably going to be the cleanest market there is because it's been so dirty for so long. It's been terrible. It's been congested like no other, right? Aussie, how many times we talked about the amount of time spent, coiling and, between 52-week highs and lows and like no structure. It's just a mess, no pattern. This is a market now that should be, I would think would be a very clean technical trade because it's entering a higher period of volatility and trend where that hasn't been the case for a very, very long period of time. All right. Okay. Kiwi. Do I have to talk about Kiwi? I guess it's higher. I don't know. There's so many reasons to not like Kiwi. Maybe you don't want to trade against the dollar because the dollar sucks right now. But it's the COT stuff we've talked about for a long time. Very, 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 very bullish. Speculators are on Kiwi. I mean, so far they're right, but like when those things turn, they turn really fast, and it gets pretty ugly. I guess the one thing I would watch, and I put this up on the long-term page last week, is I would look at, this was on the weekend. I did a couple updates on the long-term page, but what I would look at is simply, 85, 93 trend line. I mean, we're kind of right at it, right? I mean, this is a monthly chart, so you can't really tell. It looks like it's right at it on the monthly chart, but here's a real-time chart, and you can see it is about 74, give or take. It's a line that goes back, 32 years, so I wouldn't expect it to hold to the pip by any means, but it's good to know it's there. And you also have the next slope line within the really big bearish fork up here around 74.40 or so. And that is at the high close from last year. I believe it is 74.50. So, I suggest just kind of watching Kiwi between 74 and 74.50, and maybe you get a reversal from there. But look, I'm not trying to do anything with this yet. Either get a reversal from 74, 74.50, ideally higher. 74.50 would be nice. Take out everything and piss everybody off. Or the alternative would be short-term chart. The alternative would be close the day back below 73.57, preferably 73.25. That's just monthly opening price. So, it's been a very difficult trade here. Probably even if you're trying to buy it. If you're trying to buy it or sell it, I can imagine that you're probably kind of frustrated because it seems like we haven't really gone anywhere. It just kind of dips and it rips and it breaks some levels and it comes right back and whatever. So, always darkest before dawn. And maybe this clears up relatively soon. Okay, dollar CAD, long-term pick. Think we're probably going to this magenta trend line, which again, 2012 low. Or sorry, 2012 low, 2013 low, 2014 low from July. That's where we're going, I think, and that's going to be, just below 123 or near 123, depending on when you get there. Tomorrow is a CAD. You got the CAD stuff tomorrow. So data-wise, what I would watch for. First thing I would watch for is basically 27.40. So this trend line, right? Just, simple trend line here. It's, kind of off the lows, consolidation around it before support, before it broke. So that's where I would watch for some sort of resistance in dollar CAD, and just kind of keep it that simple. And also, you do have a level up there. You've got, that's the August 2016 low. And, so we're getting pretty close to that point, being August. And that's 27.60. Square root level is 27.47. So this region right here is one to pay attention to closely tomorrow. All right. And I will leave it there with dollar CAD. Okay. Let's take a look at a cross. this on this euro up move, you know, would be interesting. I know you have a giant reversal today, and this could, you know, it's from the 50% retrace in Euro Aussie. However, also have a parallel there. See this parallel off the election high. However, you have the underside of this trend line. It goes back to February and April, right? And that's right smack dab here. Weekly opening price is 46.55. High today is 46.47. Low today, low from June 20th is 46.26. All this jazz right here, right? So something to watch, or, you know, be aware of, I think, is the Euro Aussie picture. You know, even if it's just good resistance, and hey, what do you know? It's even a 3 waves up so far. Let's see if we have a measurement. That's exciting. Look at that. 40, not a whole lot of things that make me that excited, folks. This gets me. You got the lows, you get the week open, you get the 46.34, 2 legs up. I dig it. So yeah, that's in play on the short side. That's really the only major cross I want to look at. There's the Euro Yen cross, which is really interesting on a very long-term basis, right? It's just kind of, it's in last night's post, but maybe if I go over it quickly, and then I'm going to go through the questions you guys wanted, like crude and sugar and gold and silver and euro pound, that good stuff. Okay, so Euro Yen. You can see the high right here, right? So far, 130.77. Now this is clearly, you know, an emerging big move up. At least I'm bound to think so. But look at look at where you've traded, you know, before on this, and you got to go back a ways to see the real good stuff. But financial crisis, even that level, something. So there's something around 131. Huge support. 2005, and this was the launch that took you into the carry trade of all carry trades. You would have seen it more in other yen crosses, but you get what I'm saying, right? Support. It was resistance on the initial way up in 2003. And there was even support right here in 2003. So point being, 131 is, you know, a very clean euro yen level. It's a level that tends to be respected on its initial, you know, on its initial attempt, if you will. So that tells me that, you know, to err on the downside until probably about 126. And 126 is even, you know, same thing. You know, it's been a big price level for a long period of time. So 126 to 131 or so, we might be in that region, that range in euro yen for a bit. You know, so maybe euro consolidates, maybe dollar yen goes to 110, and then they can go higher again together, but we'll see. So that's an interesting one. And now let's look at gold. Oh, we did gold. We actually did gold and silver. Sugar. Wanted to look at sugar. Vladimir did. Let's see what sugar's doing today. Sugar dipped a little bit. So this is actually, I have an ETF right here. But we'll look at the actual underlying. So sugar. Actually, this is only an end-of-day chart because so it's ICE US Intercontinental Exchange. They basically screw everybody by making you pay extra fees for live data, right? So it's only end of day data on here. But this this chart, this is, to me, this is, you have a head and shoulders here, and you're breaking out of it. Now today you've dipped a little bit. You're not going to see it on this chart. This is a very bullish chart to me. And I'm, initial resistance is obviously going to be 15.15 right here. Can you guys all hear? Amir says he has an audio problem. I just want to make sure it's not everybody. AV is good, says Pooja. Okay. Audio fine, says Vladimir. Yeah. Well, Amir does seem, let's see here. The audio issue is on your end. All right. Anywho, sugar 15.15, 15.12, I guess, is your upper parallel and the low from April 27th, April low. So would expect to see, kind of a battle there, I guess. But I like sugar higher. I mean, a bigger picture chart, really bullish. Go to the weekly, huge support that we're coming off of. So, I'm looking up towards like 18s in sugar. So, which would be, quite a move from here. Sugar is very volatile. So $4 move in sugar, not that, would not be that unexpected, I should say. I mean, look, even from, February, you've gone from 21 to 12. I mean, sugar moves, okay? So there's that. Now, SGG is the ETF for sugar. And then this actually charts really well. You can see the fork here making a perfect channel. I guess there's a possibility that you could drop down to the lower parallel median line at 29.15 on SGG. I have us kind of, getting into support here very soon. You just see those two highs here, $30.19 on those highs. So I'm looking for support kind of around there, like in 16 cents. We had a question on crude oil. Mahai was asking a bit about the DAX and the S&P and the divergence there. So crude, daily chart, know that the 200-day average is up here. I think you are going to get up here to 49.50. Crude's one that's obviously been sideways for a long time, but the 200-day average, right, really important in crude, it seems, over the last couple of years. I mean, 2015, it was support before the whole energy crisis really got underway. And then it was resistance on, any rally, any big rallies. Once we got above it, you got to move. It was support. It's been support, not precise. You've kind of carved, slice below it on every drop, I guess, since 2016, and then rallied a bit. And now we're back below it. So the 200 average, big stuff, 49.50. The trend line from April is up there, and I'm looking at that one because that's the trend line where the parallel ended up nailing the low. So really, it's just channel resistance. And then, if you want to take it a step further, you've got the uptrend channel, and that's at 49.50. So you've got three things at 49.50: an upward channel, a downward channel, and the 200-day average. On this 4-hour chart, I would watch for support here, 46.80, the median line, these highs. I would also watch for support if you got a larger dip down near 45.90 or so, which is the 25 line of this, short-term bullish fork. Okay, and it can draw a little, show the support here, right? You can see lots of trading on that, so that's a good sign. We didn't quite get to resistance on this last push, right? Would have thought that you'd try to go 47.90 or so, but either way, 49.50. Resistance, I think probably at some point, looks like it'd be next week with all the stuff intersecting up there, and support, if you do get a bigger dip, is, I would think, or I would expect it, put it that way, that it holds about 45.75, 45.80. So could be in for a test down here, or a run near this low from 718. That's crude. DAX and S&P. So the S&P 500, we had Mohammed's good question. Do you think S&P and the DAX, S&P new high and DAX far from a new high? You got to remember too, Mohammed, this is probably a currency function. So you've had the S&P 500, it's buoyed in part recently by simply a weakening dollar too, right? And the DAX for years has been, and the FTSE especially since Brexit, has been a function of the currency. So a really weak pound, for example, will be, give way to a strong. So here's the UK 100, right? Not a surprise that you've turned up this week as the pound's turned down. Right, so since Brexit, you can see that you've had, for the most part, weak pound, right? Strong stock market, right? Even when, so you can see the top here in the rally in the pound recently has coincided with decline in the FTSE. The DAX, same story. Not nearly as pronounced recently, but back when the euro was in free fall, that's when the DAX was on its tear higher, right? And then it went into a correction as the euro went into a correction. Okay, they've kind of been going together for a while, but you know what? If the euro really, keeps it up, it'll probably start to hurt the DAX. So, I don't put too much into it. It's not a coincidence that once the euro rally started to accelerate, that's when the DAX started to fail, okay, or top out or whatever. That was the 619, right? Week of 619 in euro is right here. Not a coincidence. That's when we got the breakout higher. That's when we started to really move higher. Same time is when the DAX started to kind of, crap out. So, I don't put too much behind it as far as market timing, but, I will say with the S&P, the level that I am watching closely, so this is SPY, the ETF. Figure I'd show this because this is probably one that people might actually use as the vehicle to trade or express their opinion. Let's see if I have it over here somewhere. Let's see. You can see some strong ags today. Corn, soybeans up good. Coffee dipping, sugar dipping. Cotton up good. Where were we here? All right. So the S&P, That was not it, was it? It was this one. Yes, it was this one. Okay, so the S&P 500, you see this line up here? We're getting really close to it. Boom, boom, support on the way up, break, resistance. It's going to be up close to 249, and you know what else is near 249? That's the head and shoulder, inverse head and shoulders target is 249.03. Okay, it's the head and shoulders. Shoulder, head, shoulder, breakout, retest, 249. So 249 essentially where I think we are going, and that probably puts you about 2490 in the S&P 500, maybe a little above it. So, you know, is this, I'm not making a long-term call or anything saying that you're going to top forever up here or top for months or whatever, but I am saying that you are getting close to a level that could actually do that. And there's certainly a trade there. Okay. Yeah, there's certainly something there. All right. Okay, I'm going to wrap it up here unless there's anything super pressing that peeps want to talk about. I got to get moving. All right, went through a lot. Hope you guys enjoyed it. As always, thank you for your time, and I will have this up and archived ASAP. I'll be out with the swing update as always later on today. All right. Have a great rest of your week and what's left of it, everybody. Thank you very much. Take care.